Good day, active trend traders. This is Dennis. Welcome to the tech tip for today. I don't like the way I said that, so I'll start over. Good day, active trend traders. This is Dennis. Welcome to another tech tip from the active trend traders. Today I want to talk about success from failure. And it's a particular chart pattern that has a high probability of success, but oftentimes we don't have the patience to wait for it. I think going into the end of 2017, it's a good time to kind of refresh ourselves on some of these patterns. And some patterns are just better than others as far as, I will say, at least predicting a potential move in the right direction. Remember, all materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So here's a little bit about me. That is me. I am back living in Hawaii now. We moved back to our home back in June of last year, and working with Mike Traeger out of Dallas, Texas, as my research partner and colleague. So let's talk about real quick success from failure chart patterns. Oftentimes we think about, how can you find success from failure? And what I'm talking about when we're talking about this is every trader would patiently wait for this pattern. If every trader would patiently wait for this pattern, their trading would improve dramatically. Again, that's an opinion that I have, but I think it is absolutely true because this pattern repeats itself over and over and over again. And on some stocks and ETFs, it repeats itself multiple times during a trading season. If your trading season is a year, then multiple times during that time. And I want to explain the what, when, where, how to know the trade clues of a retest failure. That's what it is. So what? The what? It is a failure pattern. In other words, we may be operating, going along in a nice uptrend, and all of a sudden we hit a new high, pull back, then we come back up to retest the new high, doesn't quite make it, or it gets just above it, and the momentum is actually falling, so we've got some negative divergence, and the entity falls like a rock. And it fails, and it basically is oftentimes a trend changer that we want to be looking at. So when does it happen? It happens at the end of a strong intermediate or long-term trend. Now notice I am not identifying which direction the trend, because it can happen in both a uptrend and downtrend. Where? On the attempt to move to reestablish the prevailing trend is when this happens, or where this happens. How do we know the trade clues? Well, we're going to have to take a look at the individual charts to see what those clues are. So let's take a look at a couple. One, here's play. This is a trade that we did just recently in the first part of October with active trend trading. And we want to highlight this. One, it is in a downtrend. It wasn't a downtrend since 7/21/2017. A couple of ways you can draw the trend line in there. Oftentimes, okay, so here's the trend. It is in a downtrend. But what's been going on here as we're sitting there assessing what's happening? Well, one, we make a new low on 10/13/2017. We know that play, this is Dave & Buster's, had been a strong growth stocks on the IBD 50 in the past, even on the, it was on the list this year, but it had fallen into non-favorability and dropped dramatically. It dropped from about 67 down to 40, just above 45, say 46. And so that's a nice little correction, sell-off with Dave & Buster's. We hit a new low. And then what happens? What we would anticipate happening would be that it would hit this new low, and again, we would, we'd hit this new low here. We would have the reaction and then another thrust down. Well, where would we expect it to thrust? Pull up to here, and then thrust about the same amount down to the downside. So let's say down to around 42. However, in this particular case, it stops just short or right at the previous low. And what do we have? What else do we have going on? It's telling us that, could this be a double bottom? Could this be a failed downtrend and the downtrend is being reversed? Well, we pay attention to it and we see that this was an early trend failure on 11/3/2017. This is all current. And what were some of the clues that were going with it? Well, one, we were getting a 11/3. We were getting a bullish harami, followed by a significant large green candle, which was a bullish engulfing of the last 2 days, 3 days, 4 days, which is telling that, hey, this could in fact be a nice reversal. What else were we getting? Positive divergence on the True Strength Index. And a lot of times if you're using another momentum index, you'd look for that same positive divergence. So that's the clue. That's the trade. A trade in here at about, let's say, 46. Then the price of the price went just prior to earnings, went up to about 55. So that's a $9 move on a $46 stock, or about 19% in just a few days. But again, what this could have done also is set us up for a longer term trade with Dave & Buster's, our play, that would take us even further, up here for a portfolio building type trade. So what about to the downtrend, downside? Well, similar type thing. We'll use play again. Play, new high on 6/8/17. Pushed up, new high. What was going on? We were getting divergence, negative divergence at this point, telling us, we had kind of an exhaustion type move up, strong move up on high volume, and then just faltered. This was a earnings move. Dropped back down into the moving averages on 6/19/17. That was our first clue, a shooting star. And look at what the psychology of what was going on here. We made a new high. We pulled back to a level of support, and then we pressed to push up to try to push our way back into the uptrend. This failed prior to making it to the price action of the earlier high, and then we dropped back down to support, dropped back down, and it failed again. And now by this time, we're pushing back below the 50-day moving average, and so then the failures are getting more dramatic until it finally just drops out of the line and down into the September time frame, where it goes in here to 50. So it went from about a little bit over 72 down to 50 in just a few weeks. Now, would we be expecting to capture all that? No, not necessarily. I'm highlighting this to you because there's a couple of ways we can look at trading this particular entity. One is we have an uptrend going on. So if we were long play and it came up here and did its big run and then it drops down here, and depending on what kind of rules you're applying, as soon as it breaks this trend line here significantly there, that would tell us it's time to get out. It's time to take profits and move on, or wait for another re-entry on play at a later time. Of course, with active trend trading, we would have been out up here on the breakage of the 8-day moving average, but that's for active trend traders. But this is exactly how it works. It's that failure, early trend failure. And from failure, we find success. And so a person could have either taken off their profit here or actually gone short the entity at this point, breaking back down. Or if you have a rule that says, it's got to be down and below the 50 before you take a bearish position, you would have been waiting until over here. But that's basically it's the same signal, but just in reverse order. One's for the downside, one's for the upside. And they happen all the time. So success failure charts. One, if every trader would patiently wait for this pattern, their trading would improve dramatically. Summary, watch for failure patterns in all time frames. If they do work across hourly charts, and I only trade down to an hourly or half-hour chart occasionally. Some people trade, 5 minutes, 10 minutes, even minute charts. The patterns will show themselves there. So hourly, daily, weekly, and even monthly. Simple stops and profit targets for swing trading. They're easy to set up, and the simple pyramiding approach off the daily and weekly charts. Easy to do. And we'll show some samples and variations of how this particular pattern works. And let's go over to a couple of charts. And let me see where I put that chart. I hid it away somewhere, and that's not it. There we go. Okay, on the left-hand side is a intraday chart. And I'm just going to go through here really quickly. And we've got TQQ, which is the 3-time leverage ETF of the NASDAQ. And we're working on a uptrend going along here. And also we hit a new high, approximately. A new high here. So it pushes on up to here. And then we get that pullback down below the 8-period or the 50-period moving average on an hourly chart. Then here's that little tick up trade where it tries to, do a thrust back up, but this turns out to be just a reaction, lower high, and then it starts to drop there. And on this particular one, TQQ went from about the 115 level down to about the 107 level. So that's about an $8 move. You would have, if you would have trading QQQ or the inverse of TQQ, which would be SQQQ, you're going to trade it back to the downside here. But again, this is exactly where that type of pattern does set up on and here's what new high, fails to make a new high as it tries to thrust back up, and as soon as it breaks, and that's where that's two things that I think traders could do themselves a real big favor if they would learn how to trade these little flag lines and recognize these failure patterns. And so we also had, I wouldn't call this negative divergence here because we didn't actually make it back up to the past highs, but we could see the trend line on the momentum, even an hourly chart, was going down. So, and this was in so it dropped that much in a 1, 2, 3, 4-day process and then reacted and moved back up there. The other one I want to highlight real quick is LABU. LABU, this is the 3-time leverage of the biotechs. And rather than the hourly chart, I want to take a look over here at the weekly chart to see where it, and let's go back a little bit to, to the February 2016, which is about right here. As we can see, we're in a nice, a strong downtrend where it's just falling out of the sky. It hits this new low, which turns out to be, it was a level of support, and then it breaks back up. Now, we would anticipate this to just basically roll back over and just continue down on the downtrend. However, what happens is it's a little bit harder to see on a weekly chart. You get this first little tick up here, it pulls back down, stops just short, and then rebounds. And so for this one, similar type pattern, big downtrend, a reaction up, and a reaction back down, and then a thrust up. And from there, it goes back into a really nice little upward zigzag pattern. And this went from 20 up to about just short of, about 48 in the matter of just a few weeks. And so again, this is seeing the same pattern on a weekly chart. Other weekly charts where we see this same pattern, which I think is on oil this year. And these are some of the same ETFs that we've been trading. So oil, let's go back to the process around 617, which is about here. Now, if we were in watching this, and let's say we were only having this much of our chart showing, we show a nice strong downtrend. It hits off this bottom. Now, if we were just trading it this specific way, we had two different areas. One, we push on up, then do the pullback. So this is the first downtrend failure move. We put in what's, basically a lower high, correction, a higher low, and then we react from there. And then the UCO went from, just made a real nice run over the next few weeks from that hammer to that high. It's about 46%. So that's another reason why we watch these leverage ETFs. A nice move. But I want to highlight, as you can see, this 1284 actually is significant because it reaches back to where UCO had hit a low in the past, and it came back and retested this. And with this particular low, we clearly have some, as it pulled back and retested back there, we're having some positive divergence, which then would have made this is a variation of the same theme. We basically have the we come down, made a low, and then came down and made what would appear to be a lower low. But when we compare it back over here, several weeks in the past, because this would have been back in February 2016. This is February or June 2017. We say, we've got some positive divergence. This may be the trigger to get us in. So this would be a variation of the theme. So if you miss this one, then this trade here, when we were pulling down into the retest to potentially try to go down to this low, that would have been the second failure of the downtrend, and away you went from there. So I just want to highlight to you. I hope you found this presentation both interesting and helpful. These are the type of presentations and training that we do provide for the Active Trend Trading Premium members every week on Wednesday night. And then we also have our website that is chock full of various kinds of webinars and training videos for our 2017. We'll be offering a special membership rate of $44.99, which is 40% off the regular rate of $74.99 for our members. And then also we have a early warning alerts for index ETFs. This is a service that I do with my trading research partner, Mike Traeger. $249, which is 50% off the regular price, and you can reach it at the activetrendtrading.com combo membership intro. And this offer will be in place until the end of December. So with that, I just want to close out. Thank you so much for joining us, and have exceptionally great holidays. Merry Christmas, everybody, and God bless. Aloha.